Well, 2020 started with a bang for Aura Group as it exited the 1300 Australia and a Vibe Hotel Darling Harbour. But then, of course, the pandemic started. But as we start 2021, the group has a new strategy it will take forward. And to tell us more, we're joined by MD Calvin Ng. Calvin, welcome back to Ausbiz. Great to go and see you there. Look, 2020 has been a unique year. We knew exactly, after in hindsight, it was a very troubling year. There was a lot of opportunities that presented as well. What was the one takeaway that you came out of 2020?
Yeah, look, I think liquidity, when the pandemic initially happened, there was a massive lack of liquidity. We made a call to, assist our portfolio companies raise excess liquidity. The downturn, you could not predict how long and how severe it was going to last for. So I would say liquidity.
Calvin, let me ask you this. I think it was also surprising on a number of fronts. There seemed to be a widening disconnect. I mean, people often say the market is not the economy, but there was a real distinction there, wasn't it? Markets, particularly in the US, hitting all-time record highs while the pandemic ran unchecked. We've seen some, really shocking numbers there as well. Do you think that gap can continue to widen, or does some kind of economic gravity have to kick in at some point?
Yeah, look, I definitely think markets definitely normalize over time. We're quite lucky in the sense that we focus on the private markets. At the moment, there's still a lot of mispricing and opportunity in the private markets. So we think the next 12 months will be a very interesting time for capital deployment for us.
So, Calvin, let's go and look ahead to what 2021 holds for the company. What are some of those areas out there at the moment that you see opportunity in, and why?
Yeah, so private credit probably has one of the most attractive risk-reward ratios in the market at the moment. Our private credit strategies are returning anywhere from 8 to 10% per annum. We pay a lot of those returns monthly to investors. That's relative to bonds, which at the moment are yielding at all-time lows, in some cases negative. Also, if you look historically at private equity returns, vintages that incepted post a crisis have historically outperformed. And definitely we think that's a result of mispricings in the private markets.
Calvin, one of the huge themes from last year, of course, was this bringing forward of this technology adoption of e-commerce, and we were just talking before how a lot of the retailers here have benefited from that. Do you see that trend continuing, or do we actually see things normalize a little bit?
Yeah, no, we see that trend continuing for a very long time. It's a very, very long-term secular trend. If you use e-commerce as an example, even the most developed market like the US is still only at about 20% penetration. I think Australia sits at about 12% at the moment. And, in the markets that we focus on, in particular places like Southeast Asia, it's even lower, 5 to 10%. So we don't see that those trends slowing at all.
You may have just touched upon my next question, but from a regional perspective, Southeast Asia is one place you're operating in. Where else are you looking at for opportunities?
Look, I think Southeast Asia is, the fastest growing region in the world. So, we're taking lots of learnings from places like China and India and trying to apply those to markets within Southeast Asia, like Indonesia, which has a population of 300 million, and Vietnam and Thailand. So yeah, we think there's a lot of opportunity here, both from a population size, market size, and economic growth perspective.
Calvin, before we let you go, talk to us a bit about this vaccine and the hopes of how things are going to improve as a result of that. We know that markets are forward-looking. Is it fair to say that a lot of that optimism, or any reasonable optimism, has already been priced in?
Yeah, look, we think that's our view. The market's definitely betting on a vaccine-led recovery. We're not experts in the pharmaceutical or medical field, but I think there's still risk out there. The virus continues to mutate, and so I think for us, we want to make sure all our portfolio companies have enough liquidity and robust business models that can survive any prolonged downturn.
Calvin, always good to get your perspective. Thanks very much for your time.
Thanks for having me, guys.